All right, here we go. Welcome to Weekly Roundup, August 12th, 2022.
Mm-hmm.
Scott Goodfellow here, Ben Hart there. I think in the recording, though, it just shows who's talking. I don't think it shows the side by side, right?
I think you're right. I
If
should have
they're
said
watching.
hello then.
Yeah. Yeah, say something. Yeah, so we haven't had a normal one in a couple of weeks. We've kind of rotated
Mm-hmm.
time off, which is lovely for
Yeah.
the summer. It already
Yeah.
starting to feel like fall, isn't it?
Unfortunately, yeah, it's been cold
I
at night.
know. I know, right? Hey, it's
Yeah.
a little bit chilly.
Yeah.
Hockey tryouts schedules coming out. Kids starting
Mm-hmm.
thinking about uh, heading back to
School.
school. School starting like next week for what, French Catholic board.
That's right.
University kids going off to there in a couple weeks. I got one going
Mm-hmm.
there myself. It's feeling like fall, Ben. What do you think?
It's sad, really.
Sad. Yeah,
It's
sad the
sad,
summer's.
really. Sad the
I know.
summer's going.
Such
Not
a
the kids
short
going.
season. Didn't seem like summer would took forever when you were a kid. Like it was just long, like in a good
Yeah.
way,
Yeah.
right?
Yeah.
But so I don't know if it's just us getting older or the world's changing.
Prob- Probably.
The world's changing around us.
That's it.
I had
That's
a
it.
I had a headline I wanted to read here, but now I've lost it.
Sure.
I forgot.
I'll
Anyway,
have a look. Have a look, maybe, and I
I'll have
can
a look while we get started.
start
But
yammering.
yeah, what happened in the world today? What really, or sorry, in this week?
Hmm.
What grabbed your attention this week as far as the market's concerned, and
Hmm.
anything that may be affecting it?
Yeah, so we've had a pretty good run in markets over the last, I'd say, kind of 6 weeks. So there's this big debate, and I think I've discussed it a few times over the last few weeks, just around the kind of we saw on June 14th. We may remember we saw kind of the peak in bond yields and the bottom in stock markets. That kind of coincided. That it was, I believe, that was the Tuesday before a central bank meeting, and so since then we've started to see bonds have rallied and stocks have rallied since then. And so there's this big ongoing, is it over kind of conversation that I'm having with lots of people, clients, investors, institutions, whoever I talk to. That's the kind of the big discussion of, is this the end of it? And a lot of that culminates in people saying, well, institutions are the most underinvested they've been since 2008. Mutual fund managers have more cash than they've ever had. There's this kind of sentiment, this negative sentiment, and the market's kind of climbing this wall of worry right now. And so, spending a lot of time saying, is this going to be 2015 type of event where we have recessionary numbers like we see right now, and we don't actually get a kind of a deepish recession, or is it something worse? And so that's, I'd say, primarily where I've been spending the time looking and saying, is this 2015, or is it more like the recessions that we've seen over the last 100 years?
Right. Right. Okay. So what'd you get up to based on that? What'd you get up to in the portfolios this week?
Yeah, so the one position that I went back and we try to watch back these weeklies over time, and I went back and watched. I believe it was May 2nd or something like that, when Coinbase, one of the companies that we own, they had bad earnings. Plus, I think Terra Luna was happening at that time, where they went kind of bankrupt within a few days. This kind of wall of negativity around crypto. That was in early May, and I said we started to accumulate Coinbase that week, and Coinbase, I think, touched a low of maybe $35 that week, and rallied up to about 110 last week when they announced their partnership with BlackRock. And so, just looking at the move we've had, I think it's a bear market rally we're seeing. So I was looking for ways to kind of reduce some risk and volatility within Coinbase super high. and hedge fund does. They do a risk range when they're assessing stocks and ETFs, and so they have a range of, I think, 105 to the upside and 40 to the downside. It's trading in the mid 90s this week. So I took half that position off and just put the proceeds into SHY, which is the short-term US bond. So that was a shift. Took a profit on it. I think we're up about 20+% on Coinbase in a super volatile year for it. So still believe in them very long term. Would like to add to that position, but that was a shift that haven't been making a lot of active changes with the riskier stuff. But since we've had such a nice move, I decided to reduce it and looking to potentially further reduce. But that's what I did this week.
Great. Yeah, no, it sounds like it was a great move.
Mm.
Okay, good. Anything else before you want to lay down the charts? How many charts do you got for us today?
Got 4.
4. Okay, well, you got the time.
Yeah, I don't think too much more. I think that those are kind of the primary things. Like, is this we're going to continue out of this, or is it something worse? And financial conditions are tight everywhere in the world, so I don't think anything's changed except for where you have 3 or 4 quarters of slowing GDP and inflation together, which is a deflationary impulse. And so with that, we continue to have exposure to US dollars and bonds and gold with that as the backdrop.
Great. Okay.
You ready?
I'm ready.
All right.
Ready.
Mm-hmm. Oh. Okay. Here. All right, just let me know if you can see it.
Yep. All good.
Okay. Yeah. So this, as I look through, I'm also spending a lot of time trying to understand the real estate market and what and how that plays out. And I mentioned, I think, in one of the dailies this week, a client had sent David Rosenberg's piece on Canadian housing. And so Canadian housing is one that I think plays a major role. I think I mentioned that something in the neighborhood of 30% of GDP last year in Canada was housing, construction, and finance. And if you kind of extrapolate all the kind of second and third levels of connection to the housing market, it's probably something closer to 50%. And so as we look at the world, like going through a lot of different research, but one of the things I thought was interesting just was around Ottawa. There's all this talk about the green belt and complaining about not having enough, green belt. We don't have a great breakdown and mix of urban and rural. And just, I thought this was a cool piece to look and show how much space we have in Ottawa. This is a giant city that relative to the other major cities in Canada. And so I think there is lots of development opportunities still in the Ottawa area. And, relative to the rest of the major centers in the world, I thought this is an interesting piece.
Oh, yeah, definitely. Yeah. That's very interesting. I had no idea we're that big compared to everyone else.
Yeah.
Yeah, like you said, a lot of areas to develop, like out towards Arnprior, even though that is developing, Carleton Place, all those areas in Kemptville, like all that area for sure. Embrun, Limoges, all those outskirts have tons of space still. So
yeah.
I mean, it's relative. They can be filled up in 20 years, right? But who knows?
Sure. Yeah. No, I think it's a good thing for the viability of the city long term, and just there's always a lot of negative things that come out about where we are. I thought this was an interesting way to look at it.
Very.
Yeah. Then a couple on the data side of things. So this was Hedgeye came out today, and there's this CPI and PPI, which I don't know if I know I've definitely mentioned it a couple times in the daily, but CPI is kind of like the manufacturing index, and PPI is kind of the input cost. And so the two of them together really make up kind of margins for companies. What do they pay? What do they sell for? So to speak. And so those two numbers came out this week in Canada. CPI was on Wednesday, which was lighter than expected. PPI was yesterday. And really what the data said, when you looked at the two of them, it was pretty dire from the perspective is, companies can't pass through a lot of these rising input costs to the consumer. So bad for companies. Earnings recession is likely what we're going to see. But what I thought was more interesting about this chart is this is as big a divergence as we've seen since the early 70s. And so, as I've said over these charts over the years, you can look at charts forever, but ultimately, when you put a similar data set together, they close at some point. And so, as we look at this, we got a z-score is kind of how far we are deviated. And so we got a massive deviation. At some point, I think this is going to close, and it probably closes from input costs coming down, but also companies starting to make a lot less money from demand. And so I'd expect we see this close quite violently. So I still think that data is very recessionary with what we're seeing right now.
Interesting. Great.
So next one, and then last one is not data, but I do look and talk about small business quite a bit. It's not necessarily a headline piece, but certainly in the US, small business makes up a huge percentage of the revenue. And so the first chart on the left is small business earnings, and then small business sales. And again, you look at where the arrows are on this chart, 1990, 2001, 2007, 2020. So as small business earnings fall, of course, it's showing you that consumers are under pressure, which we already know because their costs have risen by 100% from a lending perspective, and on a consumption perspective, those have also risen dramatically. So the first places to usually feel the pain of that is small business, and so we're seeing that quite dramatically right now. And nothing really would lead me to believe that something is changing with the direction of this in the short term.
Okay. Gotcha.
And then the last thing, and so, as we look at what's happening in Europe right now with the continued pressure around their reliance on Russia and their energy cost. So we look at where the alternatives may be and where this is going to come from. And so I think nuclear is potentially one of those places, which we've talked about a little bit. But the other place that continues to grow dramatically in the world is wind. And so this is an interesting backdrop, but just where the major wind countries are represented, where the companies are, things like that. If we look at top of the list, surprise, surprise, like China's the number one with 371 wind farms in China. And then if we look at how this breaks down throughout the world, it's interesting to see the countries that have done that. Canada, relative to our footprint, is actually quite large as well. So we have 31 wind farms. But I thought this was an interesting way to look at that. We have some good companies that are still publicly traded, like Northland Power, for example, good Canadian company, and they have projects around the world. One of them in the kind of just off the coast of Taiwan, and then their North Sea project is another big one, which they've just added kind of a fourth phase development of their arm. So I thought this was interesting as we think about renewable, we think about where this business is going. This is a chart that I thought was worth taking a look.
Yeah, that's great. That's very interesting.
Yeah.
Okay, great. Nice job on the charts. As always, if anybody has any questions, just put those in the chat or the Q&A, and we'll be happy to get that. So what are we looking to next week? What's in the crystal ball?
Yeah, so I do talk, I think, about Hedgeye a fair amount, but I think why that's interesting and relative is because they do signal all the time, and the amount of information that comes out of there on an ongoing daily basis is very high, and tends to give you, I guess, a sentiment for what's happening. And so there's a division of it called real-time alerts, where he kind of talks about what's happening in real time. And so as we come into the end of this week, a lot of short selling he's doing coming into the close of this week. Lots of commentary around low volumes pushing this up. You get kind of lots of overbought signals. And so with that kind of sentiment as we come into the weekend, I'd expect we get a correction, softness in equities next week. Same would apply on the other side, where they're looking at, bonds are oversold coming into the close here. So I'd expect bonds to rally and stocks to sell off into next week. And so anything outside of that narrative would make me change and think, is there anything else we need to do as a result of that? But coming in end of this week, that's what I'd be looking at and continue to track.
Great. Good stuff. Anything else you want to finish with?
So the last part, just as you mentioned at the start, we're starting to get to the end of August here. So more and more requests for RESP withdrawals and kids going to school and things like that. So, as between here and a month from now, there's not a ton of time. So if you do have demand for that, please certainly let us know, because it's not quite the same as when you take cash out of your regular investment account. That happens super quickly. This one takes a bit more time. So the more lead time you can give us, the better.
Yeah, I would say count on it taking 2 weeks for the money to actually get to you. It doesn't normally take that long, but I would count on that to give yourself at least that much buffer, just because they usually have to send checks rather than EFT. It's just the way it works for RESPs. Okay, great. Well, what's the weather supposed to be like this weekend,
Beautiful.
Not sure. Beautiful? Perfect.
Yes.
Beautiful weekend. Take in the cottage or something. All right. That's it for this week. We'll see everybody next week.
Sounds good. Thanks. Take care, everybody.
Have a good one. Bye now.
Bye.